We talk about cash, cash flow, cash cushion here all the time at Own Your Numbers. I thought I'd give you a very practical on-screen demonstration as to what does that mean or look like for a real business. Now, this is a company I worked with for the past 5 years. And when I came in, they'd raised some investment, which was, as you can see, put to good use, and the bank balance took a drop. And then over the course of like 2 years, the business was getting revenue traction, making profit margins, making profits. And you can see its bank balance grew to around 220, 230,000 after 2 years. And then the business was making further decisions to build and grow the company. Let me just show you what that cash profile looks like. Over that 3-year period, you'll see big fluctuations in its bank balance. Now, this was a mix of buying decisions to buy product, paying corporation tax on profits, paying VAT quarterly in arrears, hiring staff, increasing payroll, but also just show you the fluctuations and some timings between when the money was coming in from customers and the money was going out to build and grow the business. So over this 5-year period, the business revenue top line, not going to need to show you, was growing 40, 50% year on year. Profits was probably doubling year on year. Again, I don't need to show you revenue and profits. This is just about showing you what a bank balance is doing. Now, during this period, you'll see that right in the middle, the business was making a few bigger decisions. This was the ideal expansion, and it could afford to do so for two reasons. One is it had visibility of the cash through a forecast. It also was tracking cash cushion during this period. So this business having between 1 and 2 months of its fixed cost base in the bank or on the balance sheet at any point in time meant at least it could make decisions knowing it could trade through this period. And that's what we can see. So this was made a combination of cash management and cash cushion, the tools that a business owner needs to have when making these decisions. And the great thing about it is you can see that the business didn't borrow, the business didn't raise equity, the business didn't have to factor sales invoices, it didn't face the cost of borrowing. But what if it ran its bank balance lower than what you can see? Let me just give you a quick example. So just as if it ran it at a nominal 50K lower than what I showed you, you can see that actually things would just feel a little tighter. In this case, it would be at zero, might need an overdraft, or might need to just change the timings of what it was hoping or planning to do. What if it was just a bit more extreme? If I just brought it down, for example, by 200K, you can see actually now the profile is very different. It's fluctuating from being above zero to being below zero. And when it's below zero, something significantly needs to change, not quite to raise equity investment for a 4 or 5 month window, but it would need to borrow or have some sort of working capital or change its plans, change what it can afford to do. Equally, if it wasn't tracking any of this and was faced with a shock, you got to pay your corporation tax or you got to pay your VAT, you're left scrambling. Why? Because the cash and net cash position simply can't sustain it. And if I was to just take it down, for example, another little peg, you can see now this is just a business showing the fluctuations of being above. It's very chaotic. The reality is businesses that are facing this level of volatility of cash in, cash out, don't last long. So as a business owner, I guess, so what? Well, I guess from your perspective, you could do two things. You could look at the last 12 months, the last 24 months, or even if you've been trading for 5 years, take 5 years of data and just see what is your bank balance profile over that 5-year period. By getting a view of your historicals just shows you how you actually run your business. Have a look at it and see what it tells you. And then the second thing you can do is, what is your cash cushion? Now, there's not really a lot of point going back calculating it for the past 2 years. You might not know what it looks like in the future, but right now, today, you can see and calculate what is your cash cushion. Do you have cover for your fixed overheads, your fixed costs on your balance sheet in your bank account? If you want to calculate that, you can do it in 2 clicks. If you go to ownyournumbers.app, you can get a free spin, you can have a play, and you will see and learn something about your business today. I'd love to know how you get on. Do let me know. Thanks for watching this as always. I'll see you on the next one. Cheers for now.